Ladies and gentlemen, good day and welcome to Jindal Drilling Industry Limited Q4 and FY24 earnings conference call hosted by Antique Stock Broking Limited. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. And I've handed the conference over to Mr. Kishan Mundra from Antique Stock Broking Limited. Thank you, and over to you, sir.
Hi, thank you, Neha, and good afternoon, everyone. On behalf of Antique Stock Broking, I welcome you all to the post 4Q FY24 earnings conference call of Jindal Drilling. Today, the company is represented by their Managing Director, Mr. Raghav Jindal, and with him, we also have Mr. Kaushal Bengani, who is the Deputy General Manager, Investor Relations and Finance. So today's session would first be a brief on the results by the management, and then would be followed by a question and answer round. And with that, I would now like to hand over the call to the management. Over to you, sir.
Good afternoon, gentlemen. This is Raghav Jindal. Glad to answer your questions later. Over to Kaushal to present.
Thank you, sir. Thank you, Kishan. Good afternoon, shareholders, and thank you for joining our earnings call. In FY24, we've been able to improve upon revenue and profitability on account of deployment of all 5 rigs. In FY25, our performance will improve further as one owned rig, Jindal Supreme, will be deployed on a new contract by October-November 2024 at a higher rate. Further, we are in the final stage of acquisition of rig Jindal Pioneer, for which we had earlier taken approval from minority shareholders and are now awaiting final approval from statutory authorities. Our earnings will improve immediately on acquisition of the said rig. I will briefly summarize key financial indicators of the previous year and the previous quarter. On comparison with corresponding quarter of last year, that is Q4 FY23, our revenue in Q4 FY24 increased by 94%, EBITDA increased by 29%, PAT and EPS increased by around 80%. On comparison of Q4 FY24 with last quarter Q3 FY24, our revenue increased by 11%. However, EBITDA declined by 11% with slight increase in PAT and EPS on account of reduction in finance costs. The decline in EBITDA in Q4 FY24 was on account of a one-time settlement that the company did with ONGC of a long pending issue in which an amount of $1.704 million was receivable. This was settled for $0.982 million, leading to a write-off of $0.722 million, which is equivalent to rupees 6 crores approximately. This led to a one-time increase in other expenses. We would also like to point out that operating expenses in Q4 FY24 increased when compared to Q3 FY24 on account of rental payable and amortization of refurbishment expenses of Virtue 1. This is because in Q4, this rig was operating for 3 months, whereas in Q3, this rig was operating for 2 months, as it was deployed towards end of October 23. However, the increase in operating expenses in Q4 was compensated by increase in revenue from this rig in Q4. Coming to the annual results, on comparison of FY24 with FY23, revenue increased by 16%, EBITDA increased by 14%, and PAT increased by 2%. In this context, it is also important to note that in the year ending FY23, there was foreign exchange fluctuation gain of rupees 28 crores. This amount was only 6 crores in the year ending FY24. If the impact of foreign exchange fluctuation is taken out, then the stark improvement in our performance in FY24 is evident. This is because 3 rigs were deployed in FY24 at higher operating day rates. I would now like to take you through our earnings presentation. The first slide talks about Jindal Drilling and Industries. We are the leading offshore drilling services contractor in India's oil and gas sector. We have more than 35 years of experience in the sector of offshore drilling. We are supported by an efficient and experienced operational and management team who ensure that our efficiency is not compromised and we achieve the highest levels of safety. We've been supporting and serving ONGC for the past 30 years in their drilling programs. They are satisfied customers and we've always explored opportunities with them. Apart from 5 offshore jackup rigs that are under contract with ONGC, we also provide mud logging and directional drilling services to the oil and gas sector. We want to increase our operations in India, which is why we are in the process of purchasing rig Jindal Pioneer, which is currently deployed at a bareboat charter rate of $35,000 per day. This purchase has been approved by the board, audit committee, shareholders, and it is in the final stage of approval from statutory authorities. Once this purchase goes through, then earnings of Jindal Drilling will improve immediately. Slide 4 is about the rigs that we have in our fleet, their design, their build, and the status, whether owned or rented. The largest profit generators out of these rigs are Virtue 1, Jindal Supreme, and Discovery 1. As Virtue 1 has been deployed at high rates, and Jindal Supreme and Discovery 1 are owned by the company. Slide 5 details the order book rig-wise and for relevant durations, which will help interested shareholders in projecting the revenue of the company. The numbers are, of course, approximate calculations and may vary based on actual operational performance. The order book, as on 31st March 24, stands at $251 million. I've already spoken about the quarterly highlights. The upward trend in earnings and PAT is quite clear. On the EBITDA front, the earnings in the previous quarter were impacted by the one-time settlement that we had done for an earlier transaction. Going forward, on an year-on-year basis, EBITDA will improve on a quarter-on-quarter basis because one of our rigs was dehired on 25th of March 24. EBITDA for the first quarter of FY25 will decline and then towards the third quarter will improve sharply. The annual highlights have already been highlighted earlier. Maximum EBITDA is generated from our rig segment and that trend will continue. The borrowings of the company have increased on a gross level. However, at a net level, we are still net cash to the extent of 51 crores. Borrowings at gross level had increased because 3 of our rigs were refurbished and redeployed in the previous financial year. One more rig, Jindal Supreme, which was dehired on 25th March 24, is currently under refurbishment. As soon as refurbishment is completed, we expect to deploy the rig by October or November of 24 on a much higher day rate. Further, one loan which was taken against security of rig Discovery 1 is due for payment on 31st March 24. that amount of around 80 crores will be fully paid from internal accruals, thereby rapidly reducing the debt level of the company, the gross debt level of the company. The shareholding structure as on 31st March 24 is detailed. We have few marquee investors, in which one mutual fund has also taken a reasonable stake. We want to increase our engagement with the shareholder and investor community, and to that effect, we've opened necessary channels of communication. This concludes the presentation, and I would now ask Kishan to kindly open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Namaskar, Kaushalji. Namaste, Raghavji, and thank you for this opportunity. Firstly, Kaushalji, you mentioned about some EBITDA trajectory for the H1 and H2. I missed your comment. Can you repeat it once more?
One of our rigs, Jindal Supreme, which is a good profit generator, was dehired on 25th March as it had completed its contract with ONGC. This rig is under refurbishment and it will be redeployed by October-November 24. Since only 4 rigs will be operating in the first quarter of FY25 and second quarter of FY25, earnings will be lower in these quarters as compared to the March quarter, which will then pick up in the third quarter onwards. The only caveat here in this statement is that in these 2 quarters of FY25, if we are able to complete the transaction of purchase of rigs Jindal Pioneer, then earnings will rise in these 2 quarters itself.
And sir, where are we in terms of the purchase of Jindal Pioneer? And if I would first draw your reference to point number 4, note number 4 rather, wherein you have articulated the impairment entry that we have taken for Jindal Pioneer. If you could just explain the nature of this impairment.
It is very clearly mentioned in the note that the impairment is on account of difference in book value and market value of the asset in the books of the joint venture. This is very clearly written.
And sir, since the market dynamics are in favor of rigs, and as per our understanding, the requirement for rigs and the valuation for rigs might have improved because of the current buoyancy in the market. So what would have led to this impairment at this stage?
The book value was much higher. Even after the market improvement, the book value of the rig was much higher because it was a new rig which was purchased right before the downturn in the oil and gas cycle.
Okay, so post the valuation at which will be paying for Jindal Supreme would be after adjusting this impairment?
No, this is an impairment in the books of the joint venture. We are shareholders in the joint venture. Whatever happens in books of joint venture, on the basis of the equity holding, that effect comes in books of the parent company.
Okay, so once this asset is being transferred to Jindal Drilling, what would be the cost of acquisition, and how will this transaction, since this transaction is consummated earlier than the purchase, so the valuation will also be different in that aspect? Because
the transaction has been committed by both parties and necessary approvals by shareholders and board of both parties has already been done, and a fair valuation of the asset was also done. Therefore, the entity which owns the rig has to impair the value of the asset in its books, because the market value of the asset is not commensurate with the book value. The value at which the transaction will take place is 75 million. That has also been communicated earlier very clearly in multiple announcements made to stock exchange or shareholder notices.
Okay. So just to conclude, so 75 million value which was ascertained to Jindal Supreme was lower than Jindal Pioneer was lower than the book value, and hence the impairment also will is accounted for.
Correct.
Okay, sir. Then coming to your point of this equity arrangement part, sir, when we look at the balance sheet part of the company, we find on one side there is an increase in the loan under the current asset to the tune of 125 crore, and also other financial assets is being increased to 119 crore. If you could just explain the nature of these two line items, sir.
The debt position has already been given in the presentation.
Sir, my question is not for the debt part, sir. It is for the investment that we have under the asset category. Under other financial assets, we have the other financial assets closing balance of 119 crore. And under current asset, loans have gone up from 125 crore. So these are the loans given by the company, not accumulating to the debt. Yeah.
Yes, that is what I was saying. It is mentioned in the presentation. The loans given by the company is included in the cash which is receivable by the company. These are loans given to joint venture companies, which is there in the presentation. The way it has been presented is different in the balance sheet. That figure is part of the 276 crore figure in the presentation. The other financial assets that you are referring to are refurbishment expenses, which are amortized gradually over the duration of the contract.
So these assets will now flow into the P&L going ahead, the 119 crore. Hello?
Yes.
And lastly, sir, we heard from one of the pioneer in the segment, Great Eastern Shipping, speaking about some cancellation of rig acquisition by ONGC. So do you have any further color on the same? What are the dynamics currently? Raghavji, if you could give some understanding on how the market is currently placed in terms of the rig requirements from key players like ONGC, who is our the only customer. If you could throw some light on the same and the cancellation part also.
So the requirement with ONGC remains where they are. They have a production level which they need to achieve, and they need to get a number of rigs for which the tender was taken out earlier. Apparently, they had some negotiations with the L1 party, and they were not able to get the rates that they wanted. Plus, the L1 party had not deputed earlier rates that it had to depute also. Looking into all those considerations, I guess ONGC cancelled that contract. The rig requirement would add on to the next contract when they will come.
Okay, and so what are the current rates, the daily rates?
Current rates were around nearing $100,000 a day. The last that we got for Supreme was around 88,000.
Okay. And going ahead, taking into account the dynamics of the market, can we look for these rates to sustain in the foreseeable future?
100%. I mean, looking at the world market and looking at not only the world, what ONGC needs for its production, definitely. I mean, I would expect it to still go towards the 100,000, if not the 80s.
Correct. Sir, I think so. Kaushal, you mentioned about this mud logging and directional drilling services also. So, what would out of the total revenue profile, what percentage would be adding, and what are the factors that will contribute to further increase in this? What's the contribution perspective?
Sir, please refer to the presentation. We have given the EBITDA mix segment-wise.
Okay. I'll go through that, sir.
Majority of EBITDA is generated from the rig segment. More than 90% is coming from the rig segment.
Okay. Right. And my last question, Raghavji, earlier, one of the rigs, Jindal Explorer, we are in JB with another company of the same promoter, where you are also the joint MD, Maharashtra Seamless, and as earlier communicated to investors to various forums, is that rig will also get de-hired sometime in middle of FY25-26, sometime in the beginning of the next financial year. And earlier commentary by the owner of the rig, that is MSL, has been that they would be looking at ways to exit the rig business and concentrate solely on the pipe business. So, do the board of Jindal Drilling, wherein you are the MD, have worked or are looking to work out something in terms of this exit exercise, which the owner of the rig is trying to explain or narrate to the investing community?
No, so that's a view which MSL has to take. If it is selling the assets, we will definitely be looking at it at that time.
Okay. No discussion as of now, sir.
Correct.
Right. I'll join the queue, sir, for my follow-up. And thank you, sir, for all the
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Pritesh from Lucky Investment. Please go ahead.
Yeah, thank you for the opportunity, sir. One question on the incremental movement in your EBITDAs and the cost line. So, in the last 3 quarters, basically, you saw the round of addition of your number because of Jindal Discovery, which came in quarter 3, and then you had Virtue, some element of Virtue, which came in Jindal Discovery, which came in quarter 2 fully, and then you had Virtue in quarter 3. I just wanted to understand, in quarter 3 and quarter 4, you can call out what is the one-off expense and what would be a more normalized EBITDA for quarter 3 and quarter 4.
So, for quarter 4, there was only one transaction, which was one time. That was to the extent of 6 crore rupees. $1.7 million was receivable, out of which settlement was done for $0.98 million. So, around $0.7 million was written off, and that was the expense that was...
so, 55 crores. 55 crores was a more normalized EBITDA for quarter 4.
Yes.
Versus, let's say, 53 of quarter 2. So, quarter 2 was 53, which had the entire benefit of Jindal Discovery. Quarter 4 is 55 crores. And then what is the normalized EBITDA for quarter 3 then?
So, for quarter 3, it should have been around 61 crores. 63 crores, it should have been around 63 crores, but there was a one-time expense on account of deployment of the rig, and that is why that is why the EBITDA was lower in that quarter. So, unfortunately...
So then the normalized EBITDA for quarter 3 was about, let's say, 63 crores.
Yes.
And normalized EBITDA for quarter 4 is 55.
Yes.
Then this between the 2 quarters, quarter 3 and quarter 4, what takes away that 7-8 crores EBITDA?
So one is the lower number of days of Jindal Supreme, which happened, and the only major change is that, and then the other would be certain certain transactions of mud logging and directional drilling, which may not have generated that much revenue in these two in the fourth quarter. Apart from that, there is no other change. Okay. And how many days of de-hire would Jindal Supreme would record in the quarter 4? 6. And at $40,000? At $40,000, $40,700 per day. So $40,000. All of that will. So in the case of Jindal Supreme, since it is a rig which is owned by the company, and the contract of Jindal Supreme officially ended in January, but it continued till end of March. So when you do a calculation of the contribution of Jindal Supreme towards the EBITDA, please bear in mind that there will be no rental component, and there will also be no refurbishment component, because the refurbishment component had been fully amortized by January. Okay. Which is why from February onwards, the contribution of Jindal Supreme would be higher than it would be in January. So the contribution of Jindal Supreme would be higher. Which is why I think due to a undeployed period of 6 days, it has a larger impact than probably it appears to be. So it's undeployed with no revenue and a cost on it. Yes. Because undeployed no revenue itself is 2 crore no revenue, and then there is a cost over it which would bring the EBITDA down, right? That's how it is. Yes. Okay. What will be the rig operating cost? $20,000? We are not disclosing that. Okay. My last question is, sir, so I understood now the bridge between quarter 2, quarter 3 and quarter 4. Normalized EBITDA was more like 63 crores of quarter 3, and 55 crores of quarter 4. And since we are discussing quarterly EBITDA, I'll just conclude that in June quarter and September quarter, EBITDA will be lower than March quarter, because one of our rigs, Jindal Supreme, has been dehired and is under refurbishment. So out of the 5 rigs that we operate, the largest profit generators are Virtue One, because it's on a higher rate, and Jindal Supreme and Discovery One, because they are rigs which are owned by the company. Yes. Now, this is assuming that that the transaction of Jindal Pioneer does not go through. If it does go through and we want it to go through as early as possible, then my statement will not hold true. Perfect. Now, for Jindal Pioneer, what is the net acquisition cost that you would pay? This is net adjusting for the intercompany debt. We will pay $75 million. The company which owns Jindal Pioneer has taken loans from Jindal Drilling, because that company is joint venture of Jindal Drilling. Right. That company will then use a significant portion of this sale consideration to fully repay the loans which it has taken from Jindal Drilling earlier. That's why I asked the net. What will be the net after this adjustment? So as of now, I think the amount payable by Discovery Drilling to Jindal Drilling is around $32-33 million. I may be wrong, but it is around $30 million, just for rough calculation's sake. Okay, let's take 30. So basically the net is $45 million. And that is the net cash outflow, yes. Yes, net cash, because there will be because the debt will come back, so I will consider the net cash outflow only. So 45. And what is the incremental EBITDA that this Pioneer would Pioneer will generate, considering the rate at which it has been put up? So Jindal Pioneer is currently deployed in Mexico at $35,000 per day. This $35,000 is a bareboat charter rate, which means that there are no expenses being borne by the rig owner, no operating expenses, and there are no refurbishment expenses which are being borne by the rig owner. Further, since it will be a rig which will be owned by Jindal Drilling, there will be no rental expenses. I think maybe $1,000 per day you can take on account of administration or a miscellaneous account, or just so that there is some buffer in your estimations. But most of that earning will flow through EBITDA.
So it's like 100 crore number for a $45 million transaction that you will do to. Now this will pass to your own P&L.
Once the purchase is done, yes.
Once the purchase is successful.
Yes.
Okay. This was helpful, sir. Thank you very much.
Thank you.
Thank you. The next question is from the line of Anuj Sharma from M3 Investment. Please go ahead.
Yeah, thank you for this opportunity. Few questions. One is in terms of the total rig requirements by ONGC. How is it expected to shape up in the next 3 years?
So they have a constant demand which they had earlier on. It was supposed to increase. They don't have a specific number that they have set. They want to increase their production is what we know. Hence, and that's the last communication that we have. So it looks a good picture. The demand will be there for the next few years.
Yeah, so I'm just trying to understand if the exploration target is increasing, would the rig count also increase in terms of demand, and how do we also plan our rig deployment? So that would possibly shape up the...
We do expect the demand to go up and the rig count to go up. Hence, we want to purchase Jindal Pioneer and want to get it into the Indian market. It was made for the Indian market. We deployed it in Mexico when the demand in India was not there. We are buying it because we expect the demand to go up.
Okay, but what is the number now of the number of rigs ONGC requires at the normal run rate?
Right now we are operating, ONGC is operating around 34 rigs.
Okay, and at the bottom, what was this number?
It went down to in the 20s, early 20s to what I remember.
Okay. My second question is on Aramco recalibrating their production targets, leading to some softness in the rig rates. But our optimism seems that we are expecting it to continue to. So is that recalibration of production targets already taken into account by the market and the rates are still inching up?
So, the international markets has not really affected the Indian market directly. The international markets went to 140,000, 120,000, but it didn't really get the Indian market up to that rate. Plus the rigs that are available, even if Aramco softens its market, it's not appropriate for the ONGC segment. So the rigs which are appropriate for ONGC are very limited.
Sure.
Hence, I do not see, hence my positivity towards higher prices.
Got it. But in the international market, what has been the current rate versus the peak?
Aramco leasing out prices has softened the market for sure, yes, internationally.
By approximately, would it be more than 10-15%?
I'm not too sure. I haven't really checked out after that news.
All right. And pardon me for my ignorance on this part, but how does the rental cost work? What is the rental arrangement? So is it somehow linked to the deployment rates for the rigs which we have rented, or it has no correlation?
No, we don't disclose that.
Okay. So is the tenure of rent also not disclosed, in the sense that if somebody were to understand, how does one project the change in rental cost?
So rentals are back-to-back arrangements. The rate, the number of days that the rig is deployed with ONGC will be the exact number of days that Jindal Drilling will pay rental to the rig owner. These are back-to-back arrangements.
Okay, so it's co-terminus. All right. But the percentage is not disclosed.
Yes.
All right. And just in the new rig segment, right? New construction. How is the rate shaping up there? Some thoughts.
Earlier when we had checked, the prices had been very high. It was touching around 300 million. More than the prices, it was the time period, because the demand for spares and the equipment was so high that it was almost touching 3 years of manufacturing time. Hence, it was not feasible.
Okay. And currently, it would be ruling at 300 only?
It would have come down a bit, but the market is still very good and the demand is still very high. So I do not see it would have inched a lot.
Okay, but theoretically, if somebody were to place a new order today, what is the delivery timelines? Are the
like what I said a few months ago when we had found out, it was about 3 years, 2.5 to 3 years, and the price was about 270 to 300, depending on the specification on the rig that you wanted.
Got it. And my last question is the life of Jindal Supreme. We have had enhancements couple of times, but looking now, how long can this asset last?
We've been spending considerably on the refurbishments, and it would elongate the life for a couple of more contracts.
All right.
Each contract being a year.
Yeah, got it. Thank you so much. That's it from my side.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Khush Tandon from Ananta Capital. Please go ahead.
Hi. So I just had a couple of questions on Jindal Pioneer. You said that it is currently on a $35,000 per day revenue charter. Till when is this contract running, and when will this contract expire?
So this contract is started in March of 2019, and it will continue into 2025. Right now it is at $35,000 per day for 2024, and then from 1st January 2025 it will increase to $40,000 per day on bareboat basis. So it is difficult to define a timeline because it is based not on the number of days that it operates, but on the number of wells that particular rig has to complete. So somewhere towards middle of 2025 is where you can take an estimation.
Okay, so what you're saying is from currently it is at 35,000. From 1st Jan 25, it will come at $40,000, and till mid of 25, it will be around at that price.
Yes.
And then you are free to, put this rig in auction and then get the highest price.
So either we can sell it, but we don't want to sell it. We want to operate it in India. So after the contract in Mexico ends, we'll have to bring the rig into India, refurbish it, and then deploy it on a contract with ONGC.
Okay, so refurbishment and getting the rig to India may take 6 months.
Yes, definitely.
So maybe from 1st Jan 26, you can expect this rig to come to the market at a higher price.
It depends upon when it gets off contract in Mexico. 6 months from there.
Understood. And how are you going to finance the net $45 million outflow?
The payment would be on a staggered basis. It is not a one-time payment.
Okay, so in that, I mean to ask, will you want to take debt to finance this?
No, we will not take any debt. We have only taken debt for refurbishment of our rigs, which will get amortized as and when these rigs get deployed, because we are getting good cash flows from all the rigs, and there is debt on only one rig, which is Discovery 1, which will be fully paid on 31st May.
All right.
Internal approvals. So and as cash balances will improve, we do not see any requirement to take on more debt.
Okay. That's good to know. Finally, by when are we expecting this process to complete? And is there any event which can hamper this process?
We've submitted an application in the third week of April 24. We are following up on that application. Once approval is received, we can immediately buy it because the transaction has been approved by shareholders of both companies. And we've obtained minority shareholder approval, audit committee approval, all sorts of approval are in place. Only the regulator's approval is pending. Once that is done, we can go ahead immediately. We want to do it as early as possible.
Okay. And you are not able to tentatively give a timeline, whether it is 1 month, whether it is 1 quarter?
It is difficult to say because we don't know how much time the regulator will take. We are following up with the bank and the regulator almost every alternate day.
Okay, got it. Thanks. Those were my questions. Thank you.
Thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Yes, sir. A small clarification, Kaushalji. For Jindal Pioneer, the nature of revenue generation is not a fixed price contract, and it varies depending upon what you articulated on the number of wells being...
No, it is a fixed price contract. It is on a per day basis. The duration of the contract is not on a number of days. It is on the number of wells being drilled.
Okay. And this is
we get daily rentals of $35,000 per day for every day of 2024, and we will get $40,000 per day from 1st January 2025.
Okay. And sir, generally the duration of the contract here is on the higher side. What we are seeing currently is
it is different. International contracts cannot be compared with domestic contracts.
Okay. And sir, what is the date of the build date for Jindal Pioneer?
2015.
And when we look at the current market price of 300 million or vicinity of 300 million, are these numbers comparable with the specification of Jindal Pioneer also, or are this a different rig altogether than the one which sir was referring to valued at 275?
I don't understand. Why don't you ask what you want to ask instead of going round and round?
Okay, I'll just frame my question once again. Raghavji mentioned that when we look for new rigs in the market, the valuation we got was $275 to $300 million. So are the specification of Jindal Pioneer aligned to what sir was referring to in terms, or whether these are different specifications than the one sir was referring?
They are different specifications because the specifications of rigs which were built in 2015 are different from specifications of rigs which were built in 2005 or an earlier time period or a different time period in 2025.
Okay, so this $300 million is what has been built?
The latest rig with the latest tender requirements of ONGC. And maybe a higher specification than what ONGC might also require. So this was like the top of line thing.
Okay, no, sir. Out of our portfolio of say 5 rigs which we operate, which one would be valued at the current at this market price of $300 million? Hello.
We've been extremely patient in dealing with all your questions. I don't think we'll take any further questions from you.
Okay. Thank you, sir.
Thank you. The next question is from the line of Ketan Athavale from Robo Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. I wanted to know Jindal Explorer. So by when will it be redeployed and what will the higher charges be?
Jindal Explorer will be dehired in May 2025. And then it will get onto a new contract.
Okay, so do we have any idea on those higher charges which we can estimate on new contract?
The last contract that Jindal Drilling got from Jindal was for Jindal Supreme, which was at $88,000 per day.
Okay. And my understanding is we are planning to buy this rig, right? So what will be the price and by when will the contract be executed?
We are not planning to buy Jindal Explorer. We've never said that.
No. Okay. Okay. Got it. Thank you. Those were my questions.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next follow-up question is from the line of Anuj Sharma from M3 Investment. Please go ahead.
Yeah, thanks again for this opportunity. There was a reference earlier about ONGC cancelling a contract for a rig. Two questions there. Are we eligible when the rig is re-tendered? And second is, can it happen to us also that there is cancellation if the negotiations don't go in the way? Thank you.
So in the tender that was cancelled, we did not participate. We do not have any free rigs right now. Jindal Explorer will be the next rig which will be dehired. Once we get closer to the date of dehire, ONGC will come out with a new tender. That is what we expect, and that is what we have seen over the past so many years.
All right, but that will be a cumulative order, right? So Jindal also will have an opportunity, and the rig which is cancelled will also come up in the market. So there will be two opportunities.
Not necessarily, because this tender was for a high pressure, high temperature rig.
All right. And just
it was an HPHT tender, and whatever discussions happened between our competitor and our customer, we are not fully aware of the facts. We have a general idea only.
Sure. I appreciate that. And just, is it a common occurrence that if the buyer and seller don't meet, there are cancellations, or these are one-off events? And this is just relating to, can it happen to others as well?
These are one-off events. I think the only time in my 12, 13 years of experience that this has happened was when the rig markets crashed in 2014.
Got it. That's very helpful. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. As there are no further questions, I now hand the conference over to the management for closing comments.
Thank you, shareholders, for participating in the earnings conference call. We value the engagement that we've had with you. It also gives us an opportunity to review numbers and understand where we can do things better so that maximum value creation can take place. To that effect, we have worked earlier, and going forward, we want to increase the fleet of rigs that we operate, which our MD sir has also guided upon. Market is very good, and the only reason why our earnings fluctuate primarily is because rigs are getting off hire from old contracts which were at much lower rates and are going on to new contracts which will be at much higher rates. Going forward, outlook is very good, and in pursuance of our vision of improving our operations and capitalizing on the very good outlook that we believe is there, we want to increase our fleet of rigs. Also, a point which was missed in my earlier discussion and also in the presentation is that promoter stake has also increased in the fourth quarter of FY24, which will also be something which is appreciated by all shareholders. Thank you again for participating, and thank you, Kishan, for organizing the earnings call.
Thank you. On behalf of Antique Stock Broking Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.